Hello traders, investors, and crypto enthusiasts. Welcome to our channel, where we deliver deep dive analysis, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we're diving into a critical technical warning. Bitcoin may fall to $94,000 according to analyst Captain Faibik, after failing to hold support at $105,000. The token's 0.03% gain in 24 hours and RSI divergence signal weakening momentum, while derivatives data shows $71 million in long liquidations. Let's unpack the signal's macro risks and how altcoins like BTC Bull Token and Virtual Protocol might react to a BTC sell-off. Technical red flags. Why Bitcoin could drop to $94,000. Captain Faibik's analysis highlights a bearish divergence in Bitcoin's technicals. Despite briefly climbing to $105,000, the token's relative strength index plunged from 80 to 61.88, signaling fading buying pressure. This classic bearish divergence, where price makes higher highs, but RSI makes lower highs, often precedes sharp corrections. The immediate support at $105,000 failed to hold, exposing the $94,000 target, a level last tested in November 2022. The chart also reveals a descending trendline resistance since May 19th. Capping rallies between $108,000 $109K, a breakdown below $94,000 would confirm a double top pattern. Projecting a deeper correction to $85,000, meanwhile, the moving average convergence divergence is tightening, with the blue line nearing a bearish cross below the red signal line, a setup that historically precedes 10 to 15% drops, as seen in April 2024 after Israel's strike on Iran. Volume analysis adds to the caution. Derivatives market. Open interest drops as liquidations surge. The derivatives market is flashing red. While futures and options volume rose 1.6%, open interest fell 1.3% to $70 billion, indicating traders are closing positions rather than opening new ones. This aligns with the $71 million in long liquidations over 24 hours, a sign of capitulation. Faibik emphasizes that declining OI during rallies is a bearish omen. Historically, BTC has struggled after OI drops, as seen in March 2024, when a 10% OI decline preceded a $10,000 pullback. The current OI contraction suggests whales are reducing exposure, possibly anticipating regulatory headwinds like the SEC's crackdown on Ethereum-based tokens or Trump's Genius Act, which aims to regulate stablecoins, but could indirectly impact BTC futures. Additionally, the funding rate on perpetual futures has turned negative, signaling bearish sentiment. When funding rates dip below zero, it incentivizes shorts to hold positions, increasing selling pressure. This dynamic mirrors the $150 million dump in April 2024, after the Fed raised rates to 5.5%, reinforcing the need for strict risk management amid derivatives volatility. Macro risks, higher rates, and geopolitical tensions weigh on BTC. Faibik warns that Bitcoin's rally to $105,000 faces headwinds from higher U.S. interest rates and geopolitical instability. The Federal Reserve's 5.25 to 5.5% rate policy continues to strengthen the dollar, pressuring risk assets like BTC. Additionally, the Israel-Iran conflict has sent oil prices up 7%, fueling inflation concerns and tightening monetary policy globally. BTC's negative correlation with the Japanese yen also amplifies risks. The yen fell 3% this week, prompting Japanese corporations to buy USD and sell BTC to hedge currency exposure. This dynamic echoes 2023's $10,000 BTC crash after the BOJ hinted at ending its minus 0.5% interest rate policy. Now, with the BOJ maintaining ultra-low rates but facing pressure to act, BTC could see further volatility. Moreover, the SEC scrutiny of crypto ETFs and Trump's regulatory agenda create uncertainty. If the Genius Act stalls in Congress, stablecoin adoption may slow, reducing BTC's utility. Conversely, a Trump win in 2024 could ignite a $120,000 rally, as seen in his previous memecoin-backed policies. The key is watching fiscal stimulus plans and global rate decisions to gauge BTC's next move. Historical parallels: the 2022 bottom test and its implications. Faibik draws a parallel between BTC's current structure and its November 2022 bottom at $16,000. Back then, BTC formed a double bottom pattern, with RSI hitting oversold levels before bouncing to $30,000 by Q1 2023. Today, BTC's RSI at 61.88 isn't oversold yet. But the descending trend line from December 2024 suggests a similar test of support is underway. The difference? 2022, BTC had no spot ETFs and zero institutional inflows. Now ETFs like BlackRock SIBIT and Fidelity SY's Origin Fund hold $60 billion in AUM, providing a floor for corrections. However, the $71 million in recent long liquidations shows even ETF holders are trimming exposure. This hints at a buy the rumor, sell the news scenario, where ETF-driven rallies give way to profit-taking after milestones like $105,000. For traders, the lesson is clear. Use Fibonacci retracement levels to identify critical supports. The $94,000 zone aligns with the 61.8% retracement of BTC's rally from $60,000 to $108,000, making it a high probability bounce or breakdown level. A close below $94,000 would invalidate the bullish thesis, while a rebound above $109,000 could reignite momentum. Altcoin impact. How BTC's correction affects projects like BTC, BULL, and Virtual. A Bitcoin sell-off has ripple effects across altcoins. Projects like BTC Bull Token, which rewards hodlers with BTC at price milestones, face reduced incentives if BTC stalls. With $7 million raised in pre-sale, BTCBULL's deflationary model relies on BTC's upward trajectory. A drop to $94,000 could trigger panic selling, eroding confidence in leveraged memecoins. Meanwhile, Virtual Protocol, a decentralized AI platform rebranded from Path, could benefit from BTC's rotation into utility-driven assets. Virtual S, multi-chain. Approach and integration with AI agents for data processing make it a safer bet than pure memecoins. Its $1.2 billion market cap and Coinbase listing rumors position it to absorb capital-fleeing BTC. However, Curve Finance remains vulnerable. BTC's dominance rises to 63.83%. Stablecoin swaps on Curve have dropped 12%, reducing CRV's staking yields. This creates a double whammy: lower DeFi activity and increased selling pressure on governance tokens like WLFI and CRV, which lack real utility beyond voting rights. Investors must weigh these risks before rotating into altcoins. Firtcoin and the viral meme coin trend. A contrarian play. While BTC and ETH face selling pressure. Firtcoin is surging on Solana. It's launched in October 2024 after an AI bot named Truth Terminal generated goats memes. Firtcoin hit a $1.5 billion market cap by December 2024, outperforming Bonk during a broader altcoin sell-off. Its $0.0008 price and low entry barriers make it a contrarian play amid BTC's correction. Firtcoin's success hinges on viral FOMO, a trend also driving Snorterbot, which filters rug pulls and scams. With $1 million raised in pre-sale, Snort's AI-powered scam shield has attracted traders seeking protection in turbulent markets. However, Firtcoin's lack of utility beyond hype means its highly speculative 50% crashes post-ATH highlight the risks. For investors, Firtcoin and Snort exemplify the memecoin paradox. They thrive in BTC rallies, but collapse when institutional flows retreat. If BTC stabilizes above $94,000, these projects could rebound 300 to 500%. But a breakdown below $85,000 would likely drag them down 80 to 90%, seen with Pepe in early 2024. The key is timing. Use stop losses at 20%. Below entry and allocate only 1 to 2% of your portfolio to speculative plays. Investor strategies. Navigating BTC's correction and altcoin volatility with BTC under pressure, traders must adapt. Here are 3 frameworks. 1. Conservative strategy. Defend against further downside. BTC. Hold if you believe in its role as a reserve asset, but use stop losses at $90,000. Stablecoins. Shift 10 to 20% of holdings to USDT, USDC for liquidity during panic. ETFs. Monitor EBIT and Fidelity ETF inflows. If institutional buying resumes, BTC could stabilize. 2. Aggressive strategy. Trade the correction with precision. BTCBULL. Buy dips below $0.00257 for leveraged exposure to BTC rallies. VIRTUAL. Accumulate near $0.0003 with stop loss at $0.00025. Targeting $0.0005. Stop losses. Protect gains with tight stops on meme coins like Fartcoin and Pepi. 3. Hedging strategy. Balance BTC with DeFi and AI projects. Allocation. 50% BTC, 30% ETH, 20% altcoins. Why? BTC EC offered downside protection, while BTC BULL provides leveraged upside. Risk management. Rebalance quarterly to maintain exposure. Tools like Glassnode's MVRVZ score suggest BTC is undervalued, but the market's reaction to macro events will dictate the next move. Bitcoin's crucible. Will it hold or collapse? Bitcoin's test of $94,000 isn't just a technical milestone, it's a stress test for the entire crypto ecosystem. A failure to hold this level would validate the bearish case, dragging altcoins like SHIB and Pepi lower. However, a rebound above $109,000 could reignite the bull cycle. With ETFs and macroeconomic shifts as catalysts, for our viewers, BTC, maintain a core position but trim exposure if RSI breaks below 50. Watch for $3,200 resistance. If broken, ETH could outperform BTC. Meme coins, treat them as short-term trades, not long-term holds. What do you think? Will BTC stabilize at $94,000? Or is this the start of a deeper correction? Share your views in the comments. Don't forget to subscribe for real-time updates and join our live streams, where we dive deep into charts, news, and blockchain trends. Remember, crypto investing requires research, discipline, and patience. Bitcoin may be a stellar bet, but always assess your risk profile. Till next time, may the market treat your trades kindly.